Dave, I think you asked before, is this, when you looked at the TOS analyzer, is this a bearish spread? And I said yes. Okay. And what is the easiest way to tell, even without looking at a chart, if this is bearish, bullish, or neutral? No, Mike, I would not. I would not. Okay, what is the easiest way to look at to see if this is bearish, bullish, or neutral? Without even, yeah, Gary's got it, the width of the spreads. Okay, so if I look right up here, guys, okay, here is the breakdown of what this position is. Okay, everybody see that? I'm long a 222.5 put, right? That's the first strike. I'm long the 222.5 put. And I'm short a 215 put. Right? So I'm actually long a $7.50 wide put spread. Then the second part to this trade, because that's what a butterfly is, it's really just the combination of two spreads. The second part, I'm short a 215 put but long a 212.5 put. You're right. Let me adjust these. Hang on. Same concept. Yep, just had it wrong here. So this is actually the 225 put and the 217.5 put and the 215. Thank you. Okay. Same concept. I'm long a $7.50 wide put spread, and I'm short a $2 wide put spread. So if I just break it down and look at it that way, I know then my bias is to the short side because my long put spread is $5 wider than my short put spread. Does that make sense? Does that make sense to everybody? So that tells me right off the bat that I'm going to have a short position. The put spread I'm long has a wider difference between the strikes than the put spread I'm short. So a butterfly, and in this case a broken wing butterfly, broken wing meaning it gives us extra directional delta, this in this case to the downside. Again, it's all it is the combination of two spreads, a long spread and a short spread. I'm selling the $2.50 wide put spread to finance the purchase of my $7.50 wide put spread. Okay, conceptually, does that make sense? Okay, so now let's fill in the prices. At 200, value of this long put is going to be 25. And remember, these prices we're filling in here, guys, like it says here, are at expiration. Not before expiration, but at expiration. Okay? So if you have any question while I'm filling these in, okay, just ask. And I'll stop when we get to a very critical point here. Well, John, if the stock is trading 200, okay, and we have the 225 put at expiration, what is the value of that put? Remember, this is why we're measuring this at expiration. So we know the value. There's only intrinsic value, no premium, no extrinsic value. So this is all just intrinsic value. Okay? Okay, so before I put this next one in, thanks, Bill, have a good one. Before I put this next one in, what's so special about 217 and a half? Bingo, Martin, thank you. So watch what happens to our P&L. Okay, anything below 217 and a half, you can see our P&L stays stagnant. But watch what happens here at 217 and a half. Whoops, didn't mean to do that. Hang on. It was supposed to be that. And then that. That's our max P&L. That is our max P&L. Right at the short strike. Now, what's so special about 223.45? Exactly. Break even. Okay, and then you'll see as we go up here, regardless how high we go up, our losses are capped out at the price that we pay for the spread. Can never lose more than what we pay. Okay. So David, now you can see that this is a bearish spread. All right, any questions? I can. I don't think I really need to, David. I mean, you could probably figure this out, but I'll be happy to. Okay, I don't think I need to put 219 in. I mean, hopefully you can see the general trend there. Did it break through resistance? I think there's some resistance at the 236 to 237 area. What's 445, David? Yeah, you're right. So I don't need to put it in there. You are correct. All right, can I wrap this up? Hopefully this helps everybody. I have this recorded. I will post this in the room.